Staying cash flow positive is an absolute essential skill for all small business owners, but it's something that we often learn by trial and error. And over the years, I've unfortunately made more errors than I'd like to admit and been in some pretty difficult situations. I've ended up having to borrow from Peter to play Paul, and I've had to be quite creative with how I've financed certain expenses, which I should have seen coming, but for whatever reason didn't. However, over the years, I have developed a simple set of financial principles that I use in my business that I help my clients to understand and to implement in order for them to not have the horrible surprises that I have over the years, and to be able to sleep at night knowing that you've got cash in the bank, you know where you're at, and you know that you're going to be able to pay your wages, yourself, your rent, your mortgage, whatever, on a monthly basis. And I want to share those with you today. And this really follows on from a conversation I had in a coaching call today with a couple of my clients who were asking about this particular subject with regards to using VAs or virtual assistants for bookkeeping and accounting. And it really led into a super interesting conversation that I wanted to share with you, which really leads on from some of the podcast interviews I've done with some experts on finances. And today is going to be my take on all this and what I practically do and how you can do the same to hopefully find yourself in a better cash position than you are today, or just know exactly where you are at, and maybe it's better than you think. Today, I'm going to jump into all that and more besides.
So the question is this: how do entrepreneurs like us, who don't have an endless supply of cash, how do we leverage the best apps, virtual assistants, automation tools, and systems to scale our businesses, increase our profits, and have more time to do what we love to do each day? That is the question, and this podcast will give you the answer. My name's Dr. Steve Day, and this is Systemize Your Success.
As a small business owner, we have so many things to think about. We are constantly looking to drive sales, to attract new customers, marketing, to improve operations, to systemize, automate, use AI. And sometimes our cash flow, or the money actually that's in the bank, sometimes doesn't get the attention it should in the timely manner that it needs to, in order to make sure you don't fall foul of a situation that I've been in more than once, where there is no money in the bank, but there's bills to pay. And this is, I know, something that a lot of business owners go through, that but with the demands on our time and our mind and trying to basically just juggle so many balls, that we sometimes actually forget to do the real basic stuff that can help us to live a less stressful life, to make better business decisions, and just to be able to sleep better at night. And that is to have cash in the bank, to know where you're at every month, to know what your expected outgoings are, what your expected income is, and to know you've got the funds available to actually make your commitments, to make your financial commitments, and to know that you've got cash put aside for your holiday next year, or to pay your VAT bill, and all those really important things that we need to do in life. But sometimes we forget to do them. Well, definitely me, and definitely as a business owner with ADHD, this is stuff that I don't find particularly easy. It doesn't come natural to me, despite being good with figures and numbers. I had to really work at putting systems in place to allow me to be totally confident that I've got the money I need to make my business function both today and in the coming months. And this has the knock-on effect of this, I should say, it's really improved the decisions I've made as a business owner, including sales decisions. And it's difficult when you're starting out and you're desperate to get cash in the bank and to just make every sale you can. But if you put some steps in place from the beginning, and I wish I'd done this way earlier than I did in real life, if put some steps in the beginning to build up a small cash reserve, which you can add to over time, it can allow you not to be in that desperate situation where you're clawing at, trying to claw at sales and push things over the line, even if you know it's not actually the best business decision, or you're taking on a client you know really deep down you shouldn't be taking on, but you just do because you desperately think, or you do definitely need the money. And so having some simple financial strategies in place with the right people at the right level for where you're at with your business can really make the difference between being confident that you've got what you need to in terms of finances, to do all the things you need to in your business, to make the right decisions about when is the right time to invest in a higher level of marketing or strategy, or to go into paid ads, or to to start turning away clients instead of just taking on anyone that's willing to give you money. Like all of these things that a lot of us do as business owners can, or should I should say, be directed by good financial systems, and good financial understanding, I should say, of where your company is at, so you know how much you can be flexible with things, or how much time you can take off for a holiday, or how many months you can survive without making sales so you can do that operational work, or how much you can lose on marketing if it doesn't all go to plan without it causing sleepless nights. Like all of these things I've been through, and it's only through going through many of these things the wrong way have I put steps in place to make sure I don't go through those similar situations again. And that's exactly what I want to get into over the next few minutes. So let's start with the 4 key topics that we talked about today during my coaching session. And that was accounting. So where should your accountant be? And who should it be? What level of accountant do you need? And talk about bookkeeping. So who should do your bookkeeping? Where should that person be? What level of bookkeeping do you need? Talking about simple cash flows to give you a clear picture of where you're at. And I'm not talking about the cash flows that are generated often by software. I'm talking about a simple structure you can put in place using a simple spreadsheet to give you a very clear understanding of where you're at. And I'll talk about how I do that. And also about a very useful technique I've borrowed and adapted from the book called Profit First, which is about having separate bank accounts for different pools or pockets of money. And that probably for me has been one of the biggest game changers. I will come to that in the end. So before I do continue, I should say a little disclaimer to say I am not an accountant. I am not a financial advisor. I have no authority to be talking about this stuff. I'm just going to share with you in this podcast what I do, what works for me, but you should seek professional financial advice if you're making any decisions about your finances. And please just take this as good, friendly advice rather than anything with any, as I say, financial expertise or backing to it. This is just what I do. All right, so first off, accountants. Now, back in the days when I started my first business, so I started my first business when I was 22. It was a property business, and I did all my own accounts. I filed my own tax returns. I did my own PRE, my national insurance. I worked out what tax I had to pay and all the rest of it. I wasn't VAT registered, so that simplified things a little bit. But I did it all myself, and I tried to learn all the different legislations and what I could offset against tax, and the tax avoidance, not tax evasion, tax avoidance skills or techniques that you can do legally to reduce your tax bill. Now that seemed to me like a really sensible thing to do at the time, because I had very little income, and I thought if I did it myself, I would be saving money, which I didn't really have to spend. And the thought of going out and finding an accountant, which I thought would be really expensive, and getting them to do all this for me would be just something, the cost would be prohibitive and I wouldn't actually be able to afford it. And I didn't see it would actually add much value, because it wasn't like I was making much money. And so I did it all myself. And I did it all myself for quite a long time. And then eventually I did get an accountant. I was recommended one for a separate business, actually, a joint venture that I did with somebody many years ago. And she wanted to get a real accountant on board. And the cost of that accountant was actually significantly less than I thought it was going to be. It was a few £100s a month. And that person then did all the things I just mentioned. They did all our POE and our national insurance. They did our tax returns. They did our filing at Companies House every year to make sure all of the legal obligations of my company were met and it was done in the proper way. And what was interesting, though, was not only did they do all that sort of box filling and ticking and submission stuff, but they actually gave us advice as well. So they would be advising us on, did you know you could offset this? Or actually, have you thought about putting your mobile phone through your company? Or have you thought about what you drive, how you drive, and would it be cost effective to put that through your company? Or claiming petrol back on all the petrol you're driving to and from my properties, for example. There were so many things that I actually didn't realize I could save money through avoidance, legal tax avoidance techniques that my accountant just introduced as just part of his job. And so in effect, with introducing an accountant into that business and then into my property business, I probably instantly saved over the course of a year, even with a very, very low income. I probably saved more money than that person was actually charging me. And if I was paying them something, it was negligible. I reckon it was probably about even. But they also took off the knock-on effect. They took off all of that learning that I had to do. I was no longer forced to go and read books on tax or accounting for small business and spend hours like building spreadsheets for everything and putting everything into the right boxes on these spreadsheets. And I shall come to that in a second because I did do that as well. But anyway, I shouldn't have been doing that, but I'll come to that in a second. And all the stuff around accounting, which I had no real reason for doing it myself. I'm not an accountant, as I said earlier. I've got no professional training in being an accountant. So why was I trying to become an accountant in effect? And it's the same like when I speak to people now about it, and I openly hold my hands up and admit that I did this mistake myself. But it's like when you're buying a house, very few people try to do conveyancing themselves because there's lawyers that do this for a living, and if you pay them an amount of money, they will then do all that legal stuff for you, so you know that when you go through the house sale it's going to happen properly and you're going to have all the right boxes ticked and everything's done properly so that the house becomes yours. But with accounting, we sort of think, we can just wing it. Well, some of us business owners do. We think we can just wing it. So my advice would be, don't try and wing it. Pay the professionals a fair amount of money for doing a return at the level of business you're at. And if you're a small business and you're just getting started, if you've only got a few £1,000s income, whether that's a month or even a year, then don't go and hire an accountant that's actually set up to help businesses that are turning over 6-7 figures. Find a local accountant like I did, someone who a high street accountant, someone who's been there for years, who specializes in dealing with micro businesses, someone who understands you don't have a lot of money, you don't need huge amounts of tax advice. What you need is just good, solid accounting just to get you over the line and make sure you meet the legal requirements. So aim for an accountant at the right level for your business. It's one of the biggest take homes, I think, from this part of this podcast. I've had good mentors that have told me not to do this and to go and get the best accountant you can afford and all the rest of it. And I sort of understand that, but it doesn't make sense to me until you are actually making profit and you have, a significant income coming in, which you then need to actually think about, well, where should this be going? How can I be really tax efficient with this? Are there loopholes or are there efficient ways to put this money to better use than for it to be sat in a bank account, whatever? But until you're making profit, just getting someone to do this for you properly saves you huge amounts of time and potential stress, gets it done right, and means that you can focus on running your business and not trying to become an accountant. I also would recommend personally to use a accountant based in your country of wherever your company is registered. For me, I just feel that I want somebody who is up to date with the local legislation with regards to what can or can't be put against tax, because it's different in every single country. And so for me, I wanted to and still do use an accountant based in the UK because that's where my company is registered. Now I also live in Sweden. I get tax advice in Sweden from a Swedish tax advisor, and therefore I've got different accountants, and if you like, different tax advice for the different countries I'm living in or I'm taxable in. Second thing that I want to talk about is bookkeeping. So bookkeeping is one of those things that so many of my clients, because I'm involved with helping people to outsource to places like the Philippines, a question I'm commonly asked is, should I get my bookkeeping done by my virtual assistant who's based, say, in the Philippines? And my advice about this, and again, this is just my personal, what I've chosen to do, so take it or leave it, is that I don't want to become a bookkeeper and learn how to do bookkeeping for my business. And I see the cost of hiring a local bookkeeper as a good investment to have somebody who understands, again, the local tax laws of how that accounting or how the books should be set up. But somebody I can also ask them to set things up to give me the figures that I need or I want in order to make the business decisions that I want. So I want someone who's flexible enough to actually do things in a way I would like them done, but also that they just basically do it all for me. And the lesson I learned about bookkeeping was, I mentioned before, I used to do all my own accounting, that included my bookkeeping. And then I got an accountant. And each year I used to put all of my receipts into a spreadsheet. So I used to go through receipt by receipt. And the time I was doing properties, I had literally a box full of receipts, not a shoebox, a proper box, like full of receipts from all of the property development stuff I've done. And back in the day, then it was a lot of cash and far less than like on cards and things. So it was harder to track. I had different accounts for different reasons. I had things I thought I could put against tax, things that I thought I couldn't. I was trying to divide it into properties as well. I basically spend about 3 days a year, block out 3 days a year just to do this. And I used to typically do it right at the end of the year. If the financial year has finished in April, in the UK, you have to do your tax return the following January. So you've got this big window. And I used to always do it in January. So I didn't have time to actually get efficient with my tax and how I was going to do things or plan ahead, because I left it to the last minute, because I always found things that were more important and urgent to do than this task, which is important, not urgent, until it became urgent when my tax return was due. So there was me sat there doing all my putting all my receipts into my spreadsheets, making it all pretty, color coding it and everything, and then sending it to my accountant each year. And he then, after, I can't remember, 4 or 5 years of doing this, I turned around to him and said, this year, I'm really sorry. I haven't got time to do all this. I'm just going to send you my box of receipts. And he said, no problem. And off they sent, FedEx them off, and they arrived the next day, and he did it all for me. The bill that year for my accounting was almost exactly the same it had been for the previous number of years, when I'd spent this 3 days putting everything to spreadsheets. And even phoned him up about it, saying, look, maybe I shouldn't admit to this, but I think you've billed me incorrectly. I sent you all of my receipts, and you've not charged me anything for processing them all. And he's going, no, we don't use your spreadsheets. We thought you did that for your purposes, because we've got a team that goes through and does all your receipts, super quick, because that's their job. That's their entire job, is to basically put receipts into spreadsheets in the way that they need them. And so my massive lesson was literally I'd wasted days of my life doing something I thought I was doing to save money by giving it to my accountant in spreadsheets. And he just ignored those spreadsheets and did it his own way, because they're the professionals. And so that was a huge, huge lesson to me, to actually say, look, for an accounting purposes only, you could just give your entire box of receipts and all your bank statements and everything to your accountant, and they will then go through them relatively quickly. And for me, it was like the cost was almost nothing. What I then got was a bookkeeper to do it on a monthly basis, so then I could actually do some future projections and see where my profits were and think about dividend payments and stuff like that. But that's the bookkeeping. Going back to the bookkeeping on it, the bookkeeping came in later when I wanted to get some more detail on a monthly basis about where the money was going and which pockets it was going to, or which projects it was going on, and about what my cash position was. And so the bookkeeping for me was actually not an essential, and it's something that I actually didn't really need until further down the line. And for me, I think the bookkeeping costs around nowadays about £100 a month or something like that, and we got fairly easy bookkeeping. But I do have clients that do outsource their bookkeeping to places like the Philippines, and the difference between them and me is that they were already doing their bookkeeping in-house, and the business owner was typically the one doing it. And so they'd already set up all the systems, or they already had all the systems in which the business owner was doing the reconciliation and setting things up, etc. And we then helped them to systemize that to get somebody to replace the business owner in doing those tasks. Where in my case, I didn't have any monthly bookkeeping in place. So it would have been something new for me to learn, to then teach somebody else how to do it, to create the systems, etc. So for me, I just got a UK-based a bookkeeper to take over it and do it all for me. For you, if you have already got these systems nailed, you do it all in-house, you're either paying a UK-based bookkeeper to do it all, and you want to outsource it, but you understand it really well as a business owner, or you're just a business owner doing it, then there may be a cost saving and a time saving to get and train a virtual assistant from somewhere like the Philippines to do that for you. But only, and I'll repeat this, only if you really know what you're doing, because you're in effect going to be teaching somebody how to be a bookkeeper. And if you're not a bookkeeper or don't have experience in doing it, That just seems crazy to me. And if that's you, if you don't really know what you're doing, then I would advise just getting a UK bookkeeper. And for me, I just went to my accountant and said, do you have any recommended bookkeepers that you that work with you that would actually help me be more tax efficient and get things in order? And they did, and I just basically went with the recommendation. I could probably find someone a little bit cheaper, but I like the fact that they talk on a regular basis and they know each other, so it makes life easy for them, I think. So that's the first thing, is you find an accountant. In my opinion, straight away, get an accountant that's suitable size for your size of business. Second thing is get someone to do your bookkeeping for you. If you already do it in-house, you can think about systemizing it and outsourcing it to someone like the Philippines. If not, just hire a local bookkeeper to do a couple of hours a month just to keep you on track and to set up all your spreadsheets. Or we use accounting software, we use Xero, and I highly recommend using something like Xero and getting your accountant and your bookkeeper to set it up. Don't spend time becoming a Xero expert. Get your accountant, get your bookkeeper, the professionals, get one of them to set it up properly the way they need it set up for tax purposes, and then you can then discuss with them how you need it set up for the financial figures and the metrics that you need to run your business. And then together, you then set it up. So then going forward, you've got all of your accounts online. It makes things so much easier, transparent. You can see exactly where you're up to with your finances, and it makes your accountant's life super easy versus, many accountants don't even allow you to do it the old-fashioned way anymore because it's such a time saving for them to have it all digitally. So yeah, the software involved in this would be something like Xero or QuickBooks, or we used to use one called Sage years ago. I don't know if that's still going, but the one we use now is called Xero. Cool. So third thing on my list of things to talk about today is cash flow. Now, for me, understanding where I am financially in terms of the cash that's physically in my banks right now, and I say banks because I have multiple bank accounts, and I'll talk about the bank accounts I do have in a second. So knowing the total amount of money in all my banks, and also all the liabilities that I've got going forward, but not just on a monthly basis, but all of my annual liabilities as well. For example, things like insurance, accounting fees, annual subscriptions, things that basically come periodically, or it could be 5 yearly. Even if you've got properties, there's often 5 yearly costs like licensing costs, etc. So having these scheduled on my cash flow for the whole year ahead means that I know that not only if you put your monthly income on there, then you've got what your regular monthly income is, so you know what your cash flow coming in is. And then I also have a box for each month, which is my ad hoc sales. So if I ever make any sales of a product that isn't part of a monthly subscription, then I will just fill that box in each month, and that will then actually bring my cash balance in line with my actual money. So bring my cash flow, in line with my actual cash balance. And so I've got my monthly subscriptions and then the ad hoc sales. And the outgoings is all my monthly outgoings, wages, for example, and any subscriptions, and then also the non-monthly, so the recurring, say 6 monthly or annual costs, as I mentioned before. And what this allows me to do is to see that, okay, in June, for example, I've got my accounting costs and a couple of big subscriptions. So even though I may have a really big cash balance, like appears in my bank in May, in June I've got like $5,000 going out to all of these things. It means I've got to have a lot of money in my account in order for those bills to be able to be paid. And so I can then future project that on this cash flow. And that, for me, was a total game changer. Like back when I had properties, this is way back when, I used to actually take the deposits from the tenants, and that used to sit in my bank account until the next year when I used to pay them back at the end, minus any deductions. And so this money would be sat there. So I'd look like I was really cash rich on paper, but actually it's because I had to pay them back at the end of the year. So if I didn't keep that money separate somehow, then I think I had lots of money. And then when it came to actually paying them back at the end of the year, then there might not be all the money there. And to be honest, I was pretty rubbish at this, like back in the day. And I used to actually get in a position where I often have to go into my overdraft to pay them back. I mean, it was pretty terrible money management, and not something I am proud of. I'm just telling you how it was. So nowadays it's a bit different with deposits and things, because they normally go into protected accounts and all the rest of it. And I don't deal with any of my deposits anymore. I don't see the money. It's not anything. It doesn't touch my account. So I don't have that problem anymore. But that was my realization, really, or the biggest realization was, every month, at the beginning of the month, it looks great. All my rents have come in. I'm rich. And then I realized I've got all my mortgages to pay and all my, back then I had all the energy bills and everything when I used to pay for all the energy for the properties. And so there's massive outgoings each month. So if I wasn't careful, I could look at my bank account one day and think, hey, I'm rich, and go out shopping. But then throughout the month, obviously all of these bills would come out and I'd end up cash negative by the end of the month. So creating a spreadsheet which just in a simple way for the general regular income and expenditure plus those ad hoc things like I mentioned, it's super quick and easy to do. But it allows me to then future forecast where I will genuinely be, not just next month, but every single month going forward. And I can actually see that, I know what my costs were going to be. They're more fixed, even the ones that are slightly variable, but typically my costs are fixed. Whereas my income is only, for my coaching business, property business is pretty regular with regards to my income, with very few exceptions. So I can actually see my property business much easier. My coaching business is much more directed by the number of sales I've had. And so I can see that, if my expenses are going up or they're staying the same, but my income for my coaching business is going down, I can actually see by having this cash flow at what point I will become cash negative. I know I need to do something about it before that happens. So I can plan ahead and do a sales drive, or you do a big promotion or whatever, actually try and get some new business in, or ask for referrals. It's the common way that I do it, to get some new business in order to make sure I don't end up in a dark and horrible place with no money in my bank. And so that's, for me, one of the biggest game changers, actually setting up a simple spreadsheet with my month, column by column, so month by month, so April, May, June, July, etc., whatever, start at the beginning of your tax year, column for each month, and then literally have a section at the top for income, a section at the bottom for expenditure, and then have work out what my VAT will be and my tax, etc. And I'll talk about that in the next part of this, which is happening now. And so the final part of this podcast is to talk about bank accounts. So how do I actually manage this on a practical level? So I've got my accountant, they do all my accounting, that's all taken care of. My bookkeeping is taken care of by a reasonably priced bookkeeper. I got a simple cash flow spreadsheet, which allows me to project going forward and to make any changes based on ad hoc sales or ad hoc expenses that just crop up out of nowhere. And that will allow me to see the genuine amount of cash in my bank, not what it may look like when I'm looking at my bank statement, but actually what the bank statement shows, but also what it's going to show at the end of the month, because everything is on there. So that's super, super helpful. And the last part is about actually making provisions for your periodic costs or your outgoings in advance. And this was a technique that I learned from a book called Profit First, as I mentioned before. And it's a great book, and it has loads of really helpful ideas in there. And one of them, the title of the book is Profit First. It's this concept of the business owner taking profit out of the business before you pay your expenses, so that you actually grow at a rate which you can afford to grow. Now, I love that in theory, but I've never found a business owner that's managed to stick to it. And myself, I also struggle with this as well. But I took some brilliant take-homes from that book. And one of them was to set up different bank accounts for different things. So, for example, I have a operating expenses account. And for me, this is actually where my residual cash lies. In the book, it talks about moving cash into a operating expenses account, and then that's where all of your outgoings go from, all of your direct debits, etc. The challenge I had with that from a practical level was, if I miscalculated, that it could end up with the cash in the operating expenses being zero or negative, and therefore it would actually bounce some payments. And I had a few examples of this happening where I just miscalculated. There was money in all my accounts, but not in the right account. So what I now do is have a larger fund, if you like, in my operating expenses. And then I take out money when I see that balance going up. So I have a minimum balance in there that I want. And then if I see, actually, we're doing a little bit better than we thought with sales and things, and there's just accumulating too much money there, I can move it into one of my other accounts. But that way I've always got money in my operating expenses account, so nothing ever bounces. So all my income goes into my operating expenses account, and then I take out from there based on what I'm just about to talk to you now. What they talk about in the book is having an income coming into a separate account and then moving a proportion into operating expenses for your outgoings. To me, that overcomplicated it at the level of business I'm at. I'm sure there is good reasons why people do it that way, but for me, it was just another thing to have to do each month. Whereas the way I do it, I can actually do it sort of when I remember, rather than having to be absolute dead strict about it, because no one's going to bounce, no payments are going to bounce the way I do it. So the other accounts that I have set up, and I use just out of interest, I use Revolut for my sort of cash purposes, for just moving money around, because it's really convenient and it's got a great app, and it's what I set up when I set it up. But I don't use Revolut for putting any funds in, because it isn't financial authority or FCA regulated, I think the term is. So there's no financial compensation if it goes bust. So I don't use it for anything but really just money moving around and for my operating expenses. All the rest of it I can put into a normal bank, so to speak. And the accounts I have set up in my more normal bank are VAT account, a tax account, a cash reserve account, and then a personal income account as well. And so, again, this is roughly what they talk about in Profit First, but maybe subtly different. And the VAT account is really simple. I get one of my VAs to just run a report to let me know, based on my sales, what my VAT is going to be roughly, and we always round it up. So there's always too much money in that account. So every quarter, I got a little bonus that I can take out. And then I have a tax account. Similarly, I just look at the revenue. This is from my cash flow now. As I'm taking this numbers from my cash flow, I look at my revenue minus all my operating costs minus my VAT, and that's then what I use as my taxable income. And I just do it as a straight 50% of that goes in for my Swedish, because that's roughly what the Swedish tax is. 20%. They're not talking personal, talking business now. So 20%, because that's the business rate or thereabouts in the UK. So I just put that 20% into my business tax account. Sorry, I was confusing that with my personal, which is different. So 20% of my taxable income goes into the account each month. And then I have a cash reserve account. So I put a proportion of my profits in that account every single month. And that's basically everything that's on top of what I need. And that builds up. And then I have that as my reserve fund, and what I aim to do is to have 6 months in cash, and it could be in savings accounts or instant access ISAs, that sort of thing. Things that, and again, this is not financial advice, so please take financial advice on what you should be doing with your cash reserve. Don't listen to me, but about what you do with it, but obviously listen to me about doing it. So keep yourself some cash reserve, in my opinion, because it means, well, for me anyway, it means I can sleep at night. It means that I know that even if I make no sales for the next 3, 4, 5 months, which is unlikely, but if it happened for some reason, if I got injured or something and couldn't do anything and I had to cancel all my coaching, I had to refund everybody, then I can actually still survive. And that for me is hugely stress relieving. And then lastly, I have my personal income. So I put a proportion of my, set amount each month, because I have my fixed costs. This is what I need to live and survive and pay my bills. And that's what I take out. And then lastly, which I don't do, is to have a separate profit account, which is sort of like what's left on top. But that's one of the things that they advise in Profit First. I actually just have that in my cash reserve, but I have a threshold. And then you could separate that out as well. So just to run through those accounts again, that I have is operating expenses, which is my income, all my outgoings, all my direct debits, all my payments, etc. My credit, my debit cards linked to that account, etc. That's what basically pays everything. And then I have savings account set up for VAT, tax, my cash reserve, and personal income, which gets separated off at the beginning of each month. And then the one I probably recommend actually thinking about is having a profit account and just separating out your cash reserve from your true profit. And what I mean by profit, and this is where it gets a little bit confusing in my eyes with using the word profit, is your profit is obviously based on the amount of profit your business makes. What I'm talking about here is sort of the money on top of everything else, including your cash reserve. But actually your cash reserve comes out of your profit. And if, like me, you take dividends, that comes out of your profit as well, which is why I think the name is a bit arbitrary. It's just about really having separate accounts to make sure that you don't borrow from the wrong pot each month. For example, the VAT money, it isn't yours, so don't touch it. Tax money isn't yours, so don't touch it, etc. And so therefore, having these accounts set up means that I actually get paid each month now, which is beautiful because I didn't do for many, many years in my business. And B, that I've always got money to pay my tax and my VAT, which again, wasn't always the case. And so this, again, is just a really simple way to set things up in order to allow me just to function as a business, to sleep at night, to make better business decisions because I actually built up a cash reserve. So I spent a year basically living as frugally as I could. We're having a lifestyle that for me and my family, but not overly expending, and putting money into a cash reserve so that at the end of that year I had a lump of money there to allow me to then make better business decisions. So it took, it was, two ways you could do it. You could either just really push on sales, then use that, or you can do a bit of both and push sales and be a bit more frugal, which is what I did really, just to basically create a pot to be a cushion should anything bad happen. And that's it really. So just in summary, in my opinion, and this is again just my opinion, get yourself a accountant based in your country. Think about getting a bookkeeper if you think that actually having projections going forward above and beyond a simple cash flow, which is a spreadsheet you can set up yourself. If you think that'd be useful, get yourself a bookkeeper. And then finally, creating separate accounts to put pots of money in. I do it every month. I think in Profit First they say do it week or bi-monthly, but I just do it at the beginning of every month. Just move money just to make sure it's in the right place. And that simple structure, those 4 things, have really allowed me to run better business, to be less stressed, to sleep better at night, and to just make better business decisions. Hopefully that was helpful. If it was, please do hit me up with a review on your favorite podcast app, or if you listen to it on YouTube, please subscribe, like, and leave a comment. I love to read everything that people write, and will do my best to reply to any questions as promptly as possible. Well, thank you very much indeed. Until next time, thanks for listening. I'll see you then.